Okay, good morning everyone and welcome to this webinar on controller to FP&A. So we are seeing some shifts happening in the FP&A world where CFOs are actually finding it difficult to spot and nurture the right FP&A talent. So that is why this webinar where we are looking at trying to understand those shifts that are happening towards FP&A. And if you're still not in an FP&A role, then how you can try and plan your steps to move towards FP&A roles. So what are we going to cover today? Over the next 60 minutes or so, I would urge everybody to get rid of all the distractions and we'll get into some discussions, look at practical examples, some case studies, and then in the end, we'll take Q&A as well. So we'll start by understanding how does the controller world look like? What are some of the roles and responsibilities of a controller? And how is it different from an FP&A world? So when you want to move into the FP&A side of things, what are those things that are going to be different compared to a controller's world? What are some of the key activities or set of activities that are undertaken by any teams? And we'll also look at each of these activities with small examples as well. And finally, we'll look at some tips and techniques of how you can transition to FP&A, even in your current role as well, even if you're not in FP&A right now, how you kind of can leverage certain items, tap into your own experience and try and move or make a shift towards FP&A. And also we'll talk about the certifications and training programs that are available on FP&A. So that is the overall roadmap of the session. So I encourage you to get rid of all the distractions, focus for the next 60 minutes completely on what we are sharing. We'll share things in a flow, so allow us some time to take questions. We'll definitely have some dedicated time for Q&A in the end of the session. A quick introduction to begin with. My name is Dhaval Parvatikar. I'm a qualified chartered accountant. I've also completed my one-year executive management program from IIM Ahmedabad. Over the last 16 years, I've served in various industries as a CFO and a finance leader. I worked with oil and gas, software, advertising and public relations, and I've also worked with the shared services of a global commodity trading company as well. I've worked as a CFO and a finance leader in both India and now I'm based in the Middle East. Now I also serve as the co-founder and lead faculty at FP&A Professionals Institute, which we started, along with my co-founder, we started FPI somewhere at the end of November 2023. And then now there are multiple initiatives that I've undertaken to help and develop chartered accountants and finance professionals get to their next level through articles, ebooks. I constantly write on LinkedIn. Over the last 4 years, I've also been an active online instructor, and I've trained more than 5,000 professionals on various topics related to FP&A, business partnering, data storytelling, CFO coaching, leadership, and much more. So that's a little bit about me. In the last couple of years, I've got a privilege to host, be part of, and organize 10 plus CFO events. I'm personally connected with 200 plus CFOs across the Middle East and India. And I've personally been a keynote speaker, a moderator, a panelist, everything in the last couple of years where I've tried to share my experience about being a CFO and about being an FP&A leader and about working in FP&A as well. So that has been a little bit about me. I'm happy to join and happy to have joined by my partner here, Asif Masani. Asif, let's do a quick round of introduction.
Thank you so much, Dhaval. Quickly about me, I have been working in finance FP&A for over a decade across different roles, but most of my experience has been, I would say 80%, 90% has been in FP&A roles. I started working with Citibank back in 2013 as an FP&A analyst, and my most recent role before starting FPI full-time was FP&A regional lead at Coursera. I have also written 2 books that you see on the top right-hand side. The first one is all about FP&A, which was a compilation of all my LinkedIn articles and LinkedIn posts. I've written about 80 LinkedIn articles and thousands of LinkedIn posts. So that book was a compilation of all of those articles and posts, and it has received a very good response. After that, a lot of people reached out to me. How can we transition into FP&A? So that prompted us to write the second book, which also published last year, which is From Accounting to FP&A. Both those books have combined, been accessed by more than 5,000 students across from Amazon, and then we've made it available on our platforms as well. So that is a little bit about me. And I also want to share our journey at FPI. So we have had the wonderful privilege of connecting with top finance FP&A experts across the globe, right from North America to Europe to Middle East. And all of those conversations I've tried to bring into our content, which is books, podcasts, courses. So all of those insights I try to capture and I bring it to our community at FPI. And FPI's journey so far. Dhaval started the foundations course back in 2018, so that was 7 years back. Right now, it has been taken by more than 2,000 students. I think that might be an older number. It might be 2,500 by now. So 2,000 students have taken that program, average rating of 4.2. That was, I believe, the very first program ever on FP&A. I didn't. I thought I don't. I hadn't seen any program. Maybe there was one more, but probably one of the first programs in FP&A, along with the book that came in 2022. So I already mentioned about the book. So we had the book and the program. We came together and we started our live training very first cohort back in 2022. So about 3 years back, we started our first masterclass cohort with 25 students. Again, this was requests coming in from people who read the book, people who had taken the foundations course, they wanted to learn more about FP&A. Very recently, just last Friday, we started our 18th cohort and we've done more than 450 students in FP&A masterclass. I think some of you here have already taken the master year as well. Then we started the financial modeling for a program, which is again coming from requests from masterclass alumni. They wanted to learn more about modeling. So that is another program. We've completed 10 cohorts, 200 plus students have taken the program. The AI for finance and FP&A has been the latest addition to our portfolio, which is coming in from developments on AI and tools. We cover tools like ChatGPT, Copilot, Gemini, and more in that program, how to use those tools specifically for finance and FP&A functions and FP&A use cases. And at the end of 2023, we also started our dream project, which is Certified Global Professional, which you see on the top, which you see actually on the bottom right hand side, which is what we are going to talk about more in the program today at the end. And this is a 6 month in-depth certification, a very exhaustive certification that we have curated after consulting hundreds of CFOs and based on the requirements from the industry and understanding the gaps that are there in existing certifications and qualifications. So that is a little bit about FPI. We've trained more than 3,500 students across all of these courses that you see on the screen. With that, I'll get Dawal back and we'll start with the with our training today.
Thank you for that introduction, Asif. One thing that Asif and I always share in common is our extreme passion to kind of help finance professionals upskill themselves, right? We have served our part as CFOs and leaders in various multinationals, so titles don't excite us anymore, but the very fact that we get messages every day that our students have got new jobs or they have got a promotion or they have moved into an FP&A role, these kind of messages when we get are extremely satisfying and fulfilling for us at this point in time today. So with that background in mind, let's get into today's training program. Okay. Like I said, for the next 60 minutes or so, please get rid of all the distractions and focus completely on what we are trying to share here today. We'll cover some examples, case studies, and then come to the Q&A part of the section as well. So let's start by understanding the CFO's office out there, right? So I have served as, there are three primary responsibilities of a CFO. One is the controller function, where you are responsible for all the compliance elements of things. That is, you're publishing your financial audit, tax audit, the basic accounting, hygiene, and reporting, right? That is the controller function of FP&A. Sometimes companies may call it with different names, but largely today, in today's environment, when we say financial controller, usually it's largely more compliance heavy or reporting heavy in that sense. Then comes the treasury function, where you're responsible for the cash in the company, your banking relationships, your credit line, your term loans, or any other investments that you want to make. All of those things related to cash and your liquidity management comes under the treasury function. And larger the company, the more specific is the treasury function that you will notice. The third most important responsibility of a CFO is managing the performance of the business, right? Somebody needs to tell the CFO and the business leaders in the company how the company is performing. Are we pricing our products right? What are our gross margins? What are some of our expenses? How do we phase our new hires that we are planning to hire? All of these different kind of questions will get answered by FP&A teams. And some of the activities typically carried out by FP&A teams are budgeting, forecasting, different kind of financial analysis, and commercial aspects like pricing, feasibility analysis. All of these things are related to the performance of the business. When I was serving as a CFO, probably 60 to 70% of my time I used to spend on the performance management of the business, right? That's your budgeting, forecasting, management reporting, pricing, all of these things. I used to spend a lot of time on this. Probably 10-20% on the compliance part. The controllers used to take care of it. And then maybe there was a treasury team as well. So the treasury part was taken care of. And I used to kind of get involved 10% on the treasury team as well. So that's how the normal split is. So that's why they kind of enjoys this unique position of sitting very close to the CFO's office as well, because the FP&A team is informing the CFO and other senior stakeholders in the company about the performance of the business, about how the business is doing, right? In the sense that it is a forward-looking function as opposed to other-looking functions in the company. Now, let us understand the conversations in the controller and the FP&A world. That will allow us to kind of, distinguish how these two worlds are different, what are some of the primary responsibilities, and how the fundamental mindset shift needs to be there for you to move from a controller to an FP&A role. So what is the focus? The controller role focuses on compliance related aspects. You're reporting, publishing your financial statements, you're getting your statutory internal tax audit done, understanding the historical performance, right? So a lot of stress is given on the historical performance, right? Your accounting is reconciled, your entries are posted on time, your reports are published on time. That is largely the conversations on or the focus of the controller role. As opposed to FP&A, we are focusing more on forward-looking insights, where we're talking about business plan. What is our business plan for the next financial year? What is our short-term forecast? What is our medium range planning, long range planning? What are the trends and what results can we draw from it? Right? We look at the past only to draw trends so that we can predict the future, right? So that is what is FP&A. What is my short-term forecast looking like? What is my Q1 forecast looking like? What is my next 3 quarters looking like? So we are talking about forward-looking numbers and the performance of the business. So that is the focus in FP&A. And of course, different types of analysis as well. What is the stakeholder interaction? Who do you interact with? In the controller role, your normal stakeholders are your auditors, your accountants, your GL teams, your tax teams, your regulators. All of these people are your regular set of interactions. As opposed to that, in the FP&A, it's your C-suite. It's your CEO, the CTO, the marketing director, the business unit heads, right? The cross-functional teams, the HR head, all of these people you interact with. And most of the times you'll either be collecting certain inputs from them or providing certain insights to them, as the case might be, right? So your interaction is within the organization with all of these different senior stakeholders in the company who are responsible for the performance of the business. Then what are some of the technology conversations? In the controller's world, the technology conversation largely focuses around ERP system, consolidation tools, accounts receivable tool, intercompany reconciliation tools, right? So all of these are enabling you to improve your financial reporting, improve your financial statements, the standard profit and loss account, the balance sheet, the notes to accounts. Yeah. Whereas the technology conversations in the world are around planning tools, business intelligence tools. How do you improve your forecast better? How do you track your KPIs better? How do you interact with the CRM and make sure that all the trends are being captured? All the latest conversations are being captured, right? How do you improve your forecast, predictive analytics? All of these things are the conversations or the technology conversations in the world. Budgets and variance analysis. So typically what you do is that in the controller world also, you are looking at budgets and variance analysis, but that is more from a adherence or a compliance standpoint. For example, you're looking at a certain budget of a certain department and seeing that, okay, are they adhering to the budgets or no? Okay. Or you might be doing a past analysis where you have closed the books of the month or for the quarter, and now you're doing an actual versus budget analysis or current month versus previous month, all these different kind of analysis. But whereas the various analysis here is about future as well. Okay. How do I allocate my marketing budget? Should I allocate my marketing budget towards LinkedIn marketing or Instagram marketing? Yeah. So these are the questions or these are the kind of conversations that you will be having. What are some of the actions that you can take to improve the outcomes? Should I freeze my hiring in Q4? Should I hire only junior staff? Should I allow only replacement staff? Right? If there are pressures on the P&L, then can we incur these costs? Should we scale up our marketing expenses or should we scale down our marketing expenses? All of these questions are answered by looking at certain budgets and conducting certain variance analysis, which are future looking in nature. So these are some of the conversations. I hope you are now able to kind of get an idea of what happens and what are some of the conversations in the controller world compared to what are some of the conversations in the world, right? And how they are distinct, how they are different compared to each other. Now, what are some of the day-to-day questions that might come to you as an FP&A professional? So now let's get into the character of an FP&A professional. Assume that you're an FP&A manager or you're an FP&A lead. So what are some of the questions that might come to you from different business stakeholders? Okay. Question number one, again, these are some representatives and some examples. Yeah. Sorry, why is it not loading?
Just reshare, stop sharing and.
Yeah, let me try and do that. One second, Asif. Slides.
I can share.
No, I'm able to share. Yeah, there's some problem with Chrome. Yeah.
Okay.
Okay, cool. So here is the first question that might come to you. Say that, okay, what is our Q1 revenue target for the department, right? Your business lead, your business unit head will come and ask you, okay, what is the Q1 revenue target for your department, right? Again, this question will not be answered by your IFRS or your accounting standard or any of the compliance stuff that you do, right? This will be answered by a budget. Or this will be answered by your targets or forecasts as to what is the Q1 revenue target. How much have we set aside for LinkedIn marketing for this year? What is the quarterly breakup? So the marketing director will come and ask you, okay, out of the $5 million LinkedIn budget, how much have we set aside for LinkedIn marketing? How much can we spend out of that LinkedIn marketing budget in the first quarter, in the second quarter, right? So these are the kind of questions that will come to you from the marketing director. Out of the 50 headcount additions that we have planned, how many are we planning to hire in Q2? Let's say we are a 1,000 people company and we want to hire 50 more people in the coming financial year. But those 50 people will not come on day one, will not start on day one. So there needs to be a hiring plan. There needs to be a quarterly phasing. So your HR director or your HR head is asking you, how many people are we planning to hire in Q2? Okay. How much new business do we have to bring in Q4 to cover the shortfall in Q3, right? 3 quarters are already over. Probably in the third quarter, you have not met your target. So there is a certain shortfall. And now you need to cover this in Q4. How much is that shortfall and what do we need to do to cover that shortfall in Q4? That is a question coming to you from the business director or the business unit head, right? Again, answered to you by your forecast document and not by your accounting related document. What is the impact on profit if we drop our prices by 8%, right? Scenario planning, sensitivity analysis, right? That is where you will have to keep an eye on, okay, if I'm dropping my prices by 8%, and what is the impact on the margin, right? Is my sales volume going to increase? And if yes, then what is the impact on the margin, right? All these kind of different analysis is expected of you, and you are required to answer these kind of questions. Now, if you notice, all of these questions are focusing on the performance of the business. They have nothing to do with your GL accounting, your trial balance, or your IFRS or US GAAP or any of these things. And all these doesn't matter, right? So your roles are largely focused towards performance, budgeting, forecasting, management reporting, variance analysis, profitability analysis, pricing, right? Sensitivity analysis, scenario planning. All of these things are something that will enable you to answer these kind of performance related questions on a day-to-day basis. Now, understanding some of the key concepts or activities in FP&A, right? No matter what company you go into, small, medium, large, right? You will find some or the other variations of these 4 core set of activities. Your budgeting, forecasting, and under management commentaries or reporting, you will find variance analysis and profitability analysis. So let's try and spend some time to understand each of these with an example as well. Budgeting is your annual business plan. Just before the start of the financial year, you will be preparing your business plan. What is your estimated revenue? What are some of the different costs, right? And what is your estimated operating profit going to look like? So the end outcome of the budget looks pretty much like a P&L statement, right? That gives you your estimated revenue, costs, and operating profit. That's your budget. Forecast is more of an ongoing exercise, right? I have completed my 3 months in the financial year. So I will now prepare a 3+9 forecast. So what is the 3+9 forecast? 3 months of actuals plus 9 months of estimates. I won't call it revised budget. Budget number once approved is frozen. It will not change. It may go through various iterations before getting approved by the board. But once it is approved by the board, it is frozen. Then you keep monitoring the forecast. You can prepare the forecast either on a monthly basis or on a quarterly basis, depending on how your company is structured and the complexity of the business. Then comes management commentaries. At the end of every month, you will have to understand the performance of the business and come up with management commentaries. Actual versus budget, actual versus forecast, current month versus previous month, current year to date versus previous year to date. All of these different comparisons, try and understand the variances. Have you met your number? Have you not met your number? And what are the reasons for it? You capture those and then you come up with management commentaries. Profitability analysis, different kind of profitability analysis. Like for example, let's say if your company is structured product-wise, then you might be looking at product profitability. If your company is structured branch-wise, you might be looking at branch profitability, business unit profitability, regional profitability, SKU level profitability. Again, depending on the kind of structure and complexity of the business, you will look at different kind of profitability analysis and try and dissect your corporate profit and see what subcomponents of the business are doing better or what subcomponents of the business need some correction and help, right? That is your profitability analysis. So no matter which company you go into, small, medium, large, you will find some or the other variations of budgeting, forecasting, and management commentaries. Okay. So now let us spend some time to understand with an example each one of these. Okay. So we'll cover 3 examples, one on budgeting, one on forecasting, and one on management reporting. Okay, so let's try and understand each of these. So let's get started with the budgeting example. Now, I told you that the end outcome of the budget looks pretty much like a P&L statement. You have your revenue, you have your different set of costs, and your operating profit. The revenue budget usually takes the maximum time for you to kind of work on it. So what we'll do now is look at a B2B revenue budget case study. B2B revenue budget case study. Okay, so let me quickly share that with you. Again, you don't need to solve this case study. Just follow along what we are sharing on the screen. And then, of course, we can take questions as well on that. Okay, after we solve the case study. I'm going to be slightly fast, so I request your complete focus here on the steps. Just give me a second. All right. Okay. Asif, are you able to see the Excel sheet?
Yes, I can see it.
Okay. Okay, cool. Let's get started. So you are working with Infosys as business finance manager, primarily looking into client contracts, business unit profitability, and business unit FP&A. So you're working with Infosys, but you're part of one business unit. Okay, and you're looking at the business unit FP&A. Infosys is a B2B software company providing software services to various clients. Software services to various clients. The revenue generated by Infosys is largely split between retainer contracts and projects. Retainer contracts are your fixed monthly billing that you do either on a time basis or on a fixed amount basis to your clients, basis a certain agreed scope of work in the year. Your project based are your 6-month projects, 4-month projects, and depending on the milestones completed in the project, you bill them 15%, 25%, 50% of the revenue, and then you kind of recognize your revenue accordingly. That's your project based billing. You are required to work with the business lead and prepare revenue projections for 2024. You are the business finance manager of this business unit. You are required to work with the business lead and prepare revenue projections for 2024. Senior management guidance over 2023. Senior management has given you some guidance about it. Assume that you're now at the end of December 2023. So I told you that budget is prepared before the start of the next financial year. So we are now at the end of 2023 and we have to now prepare our revenue budget for financial year 2024. So let's get started. Classic steps. We'll get our templates ready. We'll have our historical data ready, right? So we have our existing client data, whether they are a retainer or a project, how much revenue did we do in 2023? And if they're a retainer, then what is the retainer per month? We have all of that data here. Now we look at building our revenue budget for 2024. So we get our template ready. The typical steps are that we get our template ready and then we go into discussions with the business lead and different project managers. And basis my discussion with the business lead, I have captured my notes here. Okay. So we look at each of these notes one by one and try and give effect to them to build our revenue budget simultaneously. Okay. So follow these points one by one in focus. Okay. Get rid of all the distractions. Visa will renew its contract for one more year at the same rate. So Visa is paying us $1 million. They have renewed the contract for one more year. So I'm going to continue it till the end of the year. Bank of America contract ends June 24 and there's a strong possibility that they may not renew. Bank of America pays us $500,000 a year. The contract is till June, but somehow the business unit lead feels that the contract will not be renewed after June 24. So I'm just marking it in red from July onwards. Whatever might be the reason, maybe the scope is coming to an end. Maybe they are going with some other vendor. They're going to come with an RFP, right? Whatever might be the reason, the business unit head is sensing that they may not renew the contract after July 24. IBM has agreed to renew the contract with an escalation of $100,000. So IBM is paying us $1.4 million. We have agreed for an $100,000 escalation. So it now becomes $1.5 million and it's continuing till the end of the financial year. ExxonMobil has decided to discontinue our services from 2024. So what happened here? ExxonMobil is one of our largest clients in 2023. They have decided to discontinue our services. Whatever might be the reason, they probably want to work with a different vendor. Maybe the 3-year contract has come to an end. They were putting out for an RFP, right? Maybe they don't want to see our face anymore. Whatever might be the reason, right? But the problem is that we have just lost our largest client. B2B services is all client relationship based businesses, right? So we have just lost our largest client. So what do we do about this? We will see. Right now, let's move towards the next point. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million. So we lost one client. We won one more client. So we won Microsoft. And the Microsoft retainer is going to start from March 24 onwards and it will continue till the end of the year. They have signed a 1-year contract with us. Now, remember, we are in December 2023. Okay. But the retainer is starting from March 24. So why there is a lag of 8 to 10 weeks? Typically in large services contracts, okay, there are complex legal clauses and legal teams probably sit on it for a couple of weeks to kind of agree on certain clauses, important clauses like intellectual property, limitation of liability, right? Liquidated damages. All of these are complex clauses, and large clients like these need a lot of time to kind of narrow down and then finalize these contracts. So we anticipate that the work will actually start from 1st of March 2024 onwards at $3.5 million per month retainer. Okay, let's go to the next point. L&T has asked for a scope and fee reduction of 20% from April 24 onwards. So L&T is paying us $1.5 million per month. Okay. And from April onwards, there'll be a scope and fee reduction of 20%. So it will be down by $300,000 and it will continue till the reason. So the scope must have reduced. That's why we are deploying less number of people on this client. That's why the fee has reduced, right? Maybe some projects have come to an end and they don't need any more maintenance or they don't need any more iterations in the project. Yeah. Ministry of Tourism are planning for a bigger project, $4 million split between April and May. So Ministry of Tourism is planning for a bigger project. Last year, they gave us a $1 million contract. This year, they are giving us a $4 million contract split between April and May equally at $2 million each. Now, this does not mean the project will exactly start on 1st of April 24. It could very well start on 10th of April 24. But right now, I'm in December 2023. So I don't know when this project is going to start. So that's why I'm going to just put it here at equally between April and May 2024. Management aims to achieve an overall revenue growth of 12%. So $125.8 million was the 2023 revenue. Okay. And on this 12%, if you add 12%, we will be looking at somewhere around $141 million in revenue for the next financial year. Okay. But I just took stock of all my clients. Okay. I saw that, all my existing client contracts, I just saw my relationships. And I saw that we are only doing $87.3 million. Okay. But the management wants us to do $141 million. You are the lead of this particular business unit. So tell me, what do we do now? Is there a way we can take it from $87.3 million to $141 million? If yes, then what would that be? Just type your responses in the chat box. Come on, wear the hat of an FP&A lead for this business unit in Infosys. Type your responses in the chat box. I need some participation. Come on, you are the lead. Inquire about projects in the pipeline. Okay, so that's one point. Everybody understand what are projects in the pipeline? It's your new clients, acquiring new business or new clients, right? Ronak says acquiring new clients, acquire new projects. Okay. Anything else that can be done? We can try to retain ExxonMobil. They don't want to see your face. They don't want to see our face. They've told us if I see you in the 5-kilometer vicinity, I'm going to shoot you, right? So they don't want to see our face anymore. So ExxonMobil is gone. Yeah. New clients is one thing that we can do for. Okay. So most of you, took stock of existing client relationships. And most of you agree that Om Prakash, reduction in variable cost is the cost element of it. Now we are only talking about revenue. We haven't still reached the P&L. We are only at the top line now. Okay. So most of you agree that acquiring new clients is the way to go, right? Acquiring new clients is the way to go. But now my challenge is, how do I present that in the Excel sheet? How do I present that in the Excel sheet now? Okay. So there are two ways to do it. Okay, let me answer this. So there are two ways to do it. One is I can just say new business. Okay. And I can face some random amounts from January to December. That is one way to do it. The more scientific way to do it is I look at my new business pipeline. Okay. I attach probability to the client pitches that are going on. Typically in a services business, what will happen is there will be client churn happening. Old clients are leaving, new clients are coming. That will always be the case. So we are in this consistent mode of pitching for new clients. Okay. So at any given point in time, let's say there could be 10, 15 pitches going on. I can kind of try and find that, okay, which is my client which has high probability of winning, which is my client which has near probability of winning, right? So the more scientific way to kind of plug this gap, okay, is I'll just say client one, I'll put a placeholder, which will be a retainer client. Let's say from March onwards, I'm going to take a $3 million client and I'm going to carry it till end of the year. And I'm going to just say client two, another retainer. Let's say I'm going to take this client from May onwards at, let's say, $2 million. Yeah. Take it till the end of the year. And like how I won the Ministry of Tourism projects, I may win some other set of projects as well. Right. So I'm just going to say project. I'm going to just conservatively estimate that I'm going to win a $1 million project every quarter. Yeah. $1 million project every quarter. So I'm at the end of the quarter on business. Now, this does not mean the project will exactly come in March. It is a placeholder, right? It might come anywhere between January to March. I don't know. Yeah. But just from a placeholder standpoint, I'm putting it in March 24. Now, this has taken me to 9.1% growth, but the management is expecting 12% growth. So let me just slightly manipulate this. Yeah. I will take $2 million project instead of $1 million project. Let me see where this takes us. Now it is at around $141.3 million, 12.3% revenue growth. Decent enough. Fantastic, right? So what are these called in the technical terms? In a services company, what are these called? So the first set of existing client contracts that you saw are called confirmed new business or identified new business, which means I know where this revenue is going to come from. Confirmed new business or confirmed revenue, right? The placeholders that I put here for $54 million, yeah, these are called as unidentified new business. I don't know where this revenue is going to come from, but this revenue will come from some clients in the pipeline that I am pitching for. Okay, that's why it is called unidentified new business. Okay, now here you see that out of my total business that I need to achieve for 24, 62% of it is confirmed business. Okay, and 38%, that is $54 million, is unidentified new business, which means I don't know where this business is going to come from. Now I want you to type your responses in the chat box. Is 38% unidentified new business at the start of the financial year? Is it high or is it low? Type your responses in the chat box. Come on. Is it high or low? It's very, very high. Okay. Vamsi says it's high. Ronak says it's high. Says depends. And I don't give generic answers. Tell me it depends on what? High because we don't know what are the opportunities. Okay. Satyam says very high. Okay. Most of you are actually feeling this is high. Okay. But let me add some context to this. Then probably we'll decode whether this is high or no. Okay. First thing, if in the past, okay, we have achieved unidentified new business anywhere between 30 to 40%, then this 38% is not high. If my last 3 years average unidentified new business achievement is only 15 to 20%, then this 38% is high. We don't know. This is unrealistic. We don't know where this is going to come from. Okay. Number one. Number two, if I was a finance head, I would convince the business unit lead by saying $54 million is not high. Okay. Can't you win 2 clients in the entire year, entire financial year, right? We have won $6 million client in the past. We just won a $3.5 million client, $2 to $3 million client. We can win like this. No, it's with a snap, right? So can't we win 2 clients, 2 solid clients during the entire financial year with all the machinery, with all the branding that we have, right? Now sounds doable, right? A $3 million win is possible. A $2 million win sounds possible, right? So again, the context makes it a high or low, right? So if you are able to achieve, you have the machinery and you are able to achieve, and you have achieved that in the past, then 38% is not high, could be normal. If not, then this could be high. Okay. Some businesses, like let's say architecture firms or interior design firms, operate from project to project. They may not have a retainer business. Their unidentified business is as high as 70, 80%, which means you don't know where 70% of your new business is going to come from, or business for the next financial year is going to come from, right? It could be as high as that. In a retainer-based model, take a CA firm, for example, a KPMG or a PwC. Okay. Once you sign a client, they are going to pay the audit fee for you every year. So the visibility there of confirmed business is much higher compared to some of the other services sectors. Okay. That's just one example. Again, technical terminology, confirmed and unidentified new business. Now that we have built our projections, now that we have built our budget for revenue budget for 2024, $1.141 million, looks achievable. Now this is going to be submitted to the group CFO or to the board for approval. Okay. So what I've also done is I've captured all the steps that we just completed, right? For reference, pull out historical data, get your templates ready, discuss with the business teams, look at unidentified new business. All of those things I've captured here. I will share this file with you in the chat box. You can take 1 minute to download it. And in the meantime, if you have any questions on the B2B revenue budget, then we can take them. I'm sure one of the questions that must be going on in your mind is, here you showed a small template with 8 clients, 8 clients and a couple of new business clients, right? What happens if there are 800 clients? How do we tackle this situation? The answer to that is, typically I would do an ABC analysis and see my top 25 to 30 clients would probably be accounting for 50-60% of my revenue. Yeah? So I will do a one-to-one meeting with the business unit lead or a project manager for these kind of clients. Okay. And then for the balance, I would go back and just prepare my Excel template and send it over to them. And my project leads or project finance managers will come back with the revenue estimates for the balance. And then I'll add my balance 750 clients in the template. Okay, Naveen has a question. How can we define organic growth in this scenario? Is it 50? All of it is organic growth. So the technical definition of organic and inorganic growth is, organic is coming from your existing business. Inorganic is coming from any new business that you have acquired. A new business meaning a new company or a new group company that is acquired. That's the technical definition of it. But however, many service companies, try and use this term interchangeably. Any revenue coming from existing clients is organic. Any revenue coming from new clients is inorganic. So they may use these terminologies as well. So be mindful of that. In this example, your $87 million of confirmed new business is organic, 54 million is inorganic. Okay, I hope that answers your question. Okay, any thoughts, any questions before we move into the next section? So here we just saw one example of a B2B revenue budget, right? So if it was a product-based company, then I would get my sales estimates from my sales staff. The pricing team will give me the price, or I would actually compute the price of the products, and then price into quantity is your sales revenue, your sales estimates that you will come up with, right? And if you're a manufacturing company, then you'll also sync your sales volume with your production volume and see if both of them are talking to each other. If you're producing 100,000 units and your sales team is giving you 110,000 units, that is out of sync. You will have to then tone it down and see, okay, you will only sell 100% of the items produced, or you have to procure that items from outside, as the case might be. So that will happen typically in a services or a manufacturer-based business. But in the interest of time, I just took a B2B revenue example. But the approach is more or less the same in any company that you go for. Okay, so let's move into the next section. Okay, so we saw the example of a B2B revenue budget case study. Okay, now after this, we'll be moving into the second core function of FP&A, that is forecasting. So what is forecasting? Let us try and understand it with a small example. The top table that you see, okay, is budget 2024. Imagine that we have prepared this budget 2024, a small P&L, revenue, costs, and operating profits, and our estimated or our budgeted revenue for 2024 is $1.35 million. Now remember, when is this prepared? This is prepared before the start of the financial year 2024. Okay. Then comes forecast. Now let's say we are at the end of Jan 2024. And look at the representation here. The BUD actually became ACT. ACT means actuals. So we got our Jan actual numbers and we actually only did $90,000, although we were able to maintain 12% margin on this. Yeah. At the end of January, now what I'll do is I will recheck my assumptions. I will see, okay, if February and December are the same as that of the budget or no. If no, then I can make those changes and publish my January forecast. On this occasion, it is the same as that of the budget. So that's why the numbers are kept the same. So in this case, my forecasted number is 1.34 million. I'm not calling it revised budget. Be mindful of this. Budget once approved, frozen, it's done, right? So my budgeted revenue is $1.35 million. My forecasted revenue at the end of January is $1.34 million. Okay. I hope you are now able to appreciate the difference between the budget and the forecast. And this companies call this as 1+11 forecast. What does that mean? 1 month of actuals, 11 month of estimates. Okay. Let's move a step further. Okay. Now I have come at the end of Chrome is not being friendly today. Just give me a second. Okay. So now see where we are. Now we have the actual numbers till the end of, yeah, okay, there are some questions in the chat at this point. Now we are at the end of March 2024. Okay. So we now have February numbers as well. We now have March numbers as well. So now what we will prepare at the end of March, we will be preparing 3+9 forecast, 3 months of actuals, 9 months of estimates. Again, at the end of March, I will test my assumptions, whether whatever numbers I had in the budget, are the assumptions still holding good or no? In this case, they are, but nobody will stop us from changing this. I can make this 110, I can make this 107, I can make this 105. Now my forecasted revenue is $1.36 million after the end of March. Okay. My budgeted revenue still remains $1.35 million. Okay. So this way, at the end of June, I will prepare a 6+6 forecast. At the end of September, I will prepare a 9+3 forecast, right? So that is the difference between a budget and a forecast. A budget is a one-time activity to prepare your financial or your estimated P&L, which will give you a revenue and your profits at the beginning of the financial year or just before the start of the financial year. Whereas forecast is an ongoing activity. Depending on the size and complexity of the business, you could be preparing a monthly forecast, checking your assumptions at the end of every month, or you could be preparing a quarterly forecast, where you're checking your assumptions at the end of every quarter. Okay, so that is the difference between a budget and a forecast. I hope you are able to appreciate this difference. Now there are some questions in the chat box. Let's look at them quickly. Okay, I'm in a project-based company. At the beginning of the year, we had pipeline of projects on the basis that we had forecast for the business, but in the month of March, one major project has not been converted into the agreement and delayed due to the compliance in the client's end. Now, which now will impact our profitability and liquidity too. That's right. So again, you all go by your assumptions at that point in time, right? If in December, I'm feeling that the Microsoft client will come from March onwards. But what if it comes from April? That may happen, right? Whatever my assumptions are at that point in time, I'll have to prepare my budgets or forecasts accordingly. Yeah. Based on Jan performance, can I not make revenue as 90 for rest of the months? No, Jan performance could be one-off, right? You will have to take your assumptions of what's happening in the market, right? And then kind of capture your numbers. Just because one month became 90, it's not necessary that all other months will become 90. Not necessary, right? Again, you go by market estimates, right? So you have to be very close to your sales team, understand, what's happening, and see what happened till March. In March, again, in February, we surpassed our budget by 10%. Here we surpassed our budget number by 15%, right? So basis this, now can I make 115 for all the months? No, I have to be reasonable. Maybe I can make 105, possible. Okay. Yeah, Dilip has a good question. What is a rolling forecast? A rolling forecast is something where you are not only preparing the forecast till the end of the year, but you're also preparing for the following financial year as well. For example, in this case, I will not stop at December 2024. I will also prepare my 3 months forecast for Jan, Feb, and March 2025. So by the time I reach June, I will prepare July to next June. By the time I reach September, I will prepare October to next September. So at any given point in time, I'll have a rolling 12 months forecast. However, the biggest challenge with FP&A professionals is that they use the term forecast and rolling forecast interchangeably. Some companies may be calling it rolling forecast, but they're actually preparing a traditional forecast like this, right? So be mindful of it. Companies who are actually properly preparing a revenue forecast, they have a 12-month rolling visibility. Okay. If I'm preparing a monthly forecast, monthly rolling forecast, at the end of April, I'll have visibility from May to next April. If I'm preparing at the end of June, I'll have visibility from July to next June. That's a rolling forecast. Okay. So I hope you are now able to appreciate the difference between a budget, a forecast, and a rolling forecast. Okay. There's a question. When making a forecast, the budgeted number can be adjusted, or will budget remain the same? The budget number, once approved and signed off by the board, will not undergo a change. It will always remain the same. Forecast is a forecast that you keep checking every month or every quarter. Budget is budget, which is prepared at the start of the financial year. Okay, Vamsi has a question. If at the end of the budget, okay, if at the end of the financial year the budget is not met, what we need to explain to the management why our budget is not met, right? So it is not just one answer, right? I mean, no, you are actually responsible for preparing that budget, right? For achieving that budget, the business teams have to go out and hunt for business. Or costs to some extent might be in your control as a finance professional, right? But you can't control sales, right? So the end answer to that is that the number will not exactly match his budget. That's 100% guaranteed. So when you're preparing budget and forecast, always be mindful of the fact that activities like budgeting and forecasting are to give you a sense of direction. Where are you heading? It's not to achieve accuracy till the last dollar. Oh, my budget was not 999.1. It was 999.2. Big deal, right? Your budget and forecasting exercise is for you to give directional clarity. On an average, can I achieve somewhere between $1.35 to $1.37 million? Possible. Okay, Ramkrishna has a question. In a 3+9 forecast, if I retain the same numbers as budget for April to December, will the CEO and the other heads accept such a forecast? So that's what you all have to agree, right? If the CEO says that, no, this is ridiculous, I want to meet only $90,000 from April to December each month, fine. Okay, it's the business lead's confidence. You'll have to converge on that decision together. It is not your call as an FA lead. You can put 150, but end of the day, the business team needs to go and achieve it in the market. So you can't prepare forecast on your own. Okay. At the end of March, the discussion happens. The board meeting or the lead business meeting with the business lead happens. And there they agree that, okay, whether 100 makes sense or should we increase it to 105 now that our February and March have been excellent performance, or should we tone it down to 95 considering the January vibes are coming back? And then you agree on that particular forecast. Because at the end of the day, they have to achieve their numbers. Okay. Hold your thoughts, hold your questions. I'm sure there'll be many. We'll take them in the end as well. Let's move forward to the next section. Okay. After understanding a little bit about budgets and forecasts, now we are moving to the next section, that is your management commentaries. In order to achieve your management commentary, you will be doing these two main set of activities. One is comparisons, actual versus budget, actual versus forecast, current month versus previous month, current quarter versus previous quarter, all of these different comparisons, and trying to understand the variance and the reason for these variances. And then comes profitability analysis. Depending on how your company is structured, you'll be doing branch-wise, business unit-wise, salesperson-wise, product-wise, SKU level, depending on the kind of company and the complexity of your business. We will be doing different kinds of profitability analysis as well. So let me quickly show you a report of a management report example. Again, what are the different types of management report? There could be a budget presentation, monthly MIS, quarterly MIS, right? There could be a flash report. There could be a OKR. There could be a KPI report. There could be a balance scorecard. There could be a number of different kind of management reports. Again, for the sake of discussion and the interest of time, I'm just showing one of them. Just give me a second. Yeah. I'm just showing one example of a budget presentation, right? So you prepared the budget for the financial year, and now you are in the board meeting, you are the CFO, and now you are presenting this to the budget. So this is again just one example. There are many slides in this. I'm not going to touch upon all of that. You first start by capturing your revenue. Yeah? What is your revenue? What growth have you achieved? What are your gross margins? What are your operating profits? You start with the high level details. Then you get into the details of it, right? The sales, we are talking about sales volume. Okay. How much has the sugar-free, I mean, this is again an ice cream company. So how much has the sugar-free ice creams done? What has the sandwich done, cup done, cone done? Right? And what are some of the commentaries around it? Okay. And then you are bridging the gap. Okay. What was the revenue in the previous year? What is the revenue in the current year? What are some of the highlights and lowlights for it, along with your respective commentaries as well. Yeah. Then comes your waterfall chart. This is called a waterfall chart, where you are presenting your price and volume variance analysis. 14% is the average price increase that you see. Okay, let me just quickly bring the slides. Yeah, 14% is the average price increase that you see. Then there are volume sales, volume declines, right? So that's your price volume variance presentation. Okay, quarter on quarter breakup of your ice cream cone sales. Then again, sales category wise breakdown. How much is, what are some of the cases? These are again cases and cartons or metric tons, whatever your company is using, right? What flavors are doing well, what flavors are doing bad, right? Again, store wise breakdown, which store is doing well, which store is doing bad, which are my top 10 stores that are doing well, all of those things. Sales director, their numbers, who is doing better, who is doing worse, right? What are their targets for this year, all of that stuff. Then cost of goods sold and OPEX, right? Cost of goods sold, how my cost of goods sold is being optimized from 45% to 40% in the current financial year, and what are the efficiency improvements that we are undergoing, right? Again, top 5 expenses, my depreciation, my compensation and benefits, all of these things, how are they moving compared to the previous year? Again, a lot of usage of waterfall charts. Okay, again, explanations about operational KPIs. What is my average direct material cost, labor cost? All of these different kind of cost components will be, decoding and then presenting it to the management. What are the new R&D initiatives that we are taking, right? Risk and opportunity analysis. What happens if there's an opportunity and these opportunities realize we should be able to make $10 million more in revenue. But if we come across these risks, then we could end up being $20 million lower compared to the budget that we have prepared, right? Again, some scenario planning. So if you are, what is the best case, worst case, base case, best case, worst case, right? So in base case, what am I achieving? If best case, then how much will be my revenue? And in worst case, how much will be my revenue? So again, these are some of this is one of the budget presentations that we normally teach in detail, step by step, in our CGFPA 6-month program, which is called the Certified Global FP&A Professional Program, which we'll talk about it in a while. Will you share the workbook and the slides? The YouTube recording is available for this particular training. I had shared the B2B revenue Excel file that I had prepared in the chat box. So I hope you've got a chance to download that as well. Okay. Where can we find the management commentaries of other companies for understanding purposes? Usually management commentaries are all internal. So you may not be able to find commentaries on budgeting and forecasting. But if it's a listed company, then you should definitely read out the MDA section of it. That's management discussion and analysis section of any good annual report that you pick up. Right there, they give you a lot of breakdown about the industry, how you're performing, what is your average unit prices, what are some of the cost pressures that they're undergoing, all of those discussions that the management normally does for shareholders. Okay, so let me come back to the slides. Okay, so the 4 core set of activities that I spoke to you about: budgeting, forecasting, and management commentaries, right? So those are some of the examples that we just saw. Yeah. Okay. So what are some of the stakeholder interactions that will happen in your every role? So, right, as I told you that you are the custodian of the performance of the business, right? So which means that you will always act as a bridge between various business teams in the company and the senior management. So you will always end up with talking to HR on the workflows planning, headcount phasing, salaries, increment, salesman incentives, benefits, all of these things, right? With the sales staff, you'll be discussing about revenue forecast, pipeline analysis, sales performance metrics, KPIs, incentives, sales commissions, all of these things you'll be discussing with the sales teams. With the marketing team, you'll be discussing about ROI for the marketing initiatives, campaign performance, what are the marketing budget allocation, when do we allocate, how do we allocate, and how much do we allocate, right? All of these discussions happen with the marketing team. With production and operations, you'll always be planning about capacity planning, utilization, what is the productivity, what is the yield ratio, what is the normal waste, right? Cost efficiency, supply chain optimization, all of these things will come with operations. Inventory management, working capital optimization, freight cost optimization, how do you kind of improve the supply chain cost? All of these things will come with the supply chain department as well, right? So consistently, you will be collecting inputs and updates from these various business teams, and also providing reports and insights to these business teams for taking certain decisions, for them to take certain decisions. Yeah. So that's the main function of FP&A. You'll always be at the center of decision making, and any decision making without sound financial analysis is incomplete. right? So that's how you'll be interacting with all of these cross-functional team members and helping them take certain decisions in a sound financial way. Cool. So now that you have understood about, the controller's world, the FP&A world, right? And core activities like budgeting, forecasting, management reporting, right? And also the stakeholder interactions in FP&A. Now, how do you prepare for FP&A roles? You may now not be still working in FP&A role, but how do you prepare for it? Now, there are certain tips and techniques that you can tap into your own experience to prepare for FP&A roles. One is leverage your sector experience. For example, let's say if you're working in audit or accounts team of an insurance company, it is slightly easier to get into an FP&A role of an insurance company. Whether it's the same company or a competing company, that might vary, but try and leverage your sector experience, your sectoral understanding. Okay, because as you saw, FP&A roles are also a lot about business understanding. Unless you understand the business, you won't be able to guide them on their KPIs. Yeah. Study management reports. If you get a chance, befriend FP&A professionals, befriend management accountants in your company, right? And try and understand them and sit with them. They may not be in a position to share all confidential data with you, but at least make friends with them and then go and sit with them and understand, okay, how do you prepare a budget? How does the budget file look like? Now, how do you collect the sales estimates? Try and be inquisitive about these and try and study the management reports while you are in your existing company. Try and leverage those relationships as well. Make compliance your bridge. Many times what happens is that you could be working in a audit firm or a CF firm or some different kind of a company or a consulting company, right? Use that compliance knowledge or use whatever knowledge you have to move over to the industry side first. Take it in a step-by-step way. Once you move on the industry side or a classic kind of a corporate, then you can start and figure out your way of how do you get into FP&A roles. Many times also you can leverage hybrid roles. Like for example, if it's a smaller set of a company, okay, they may not have a separate FP&A department, but the finance manager will have a blended role. So that person is also looking at the compliance, that person is also looking at FP&A. So you can try and go for blended roles, which might be of a higher probability for you. A Power BI and Tableau knowledge is a plus, again, although not a necessity, but if you know Power BI and Tableau, it will make your life a little bit easier. Your visualizations, your data storytelling strengths will get stronger. Create a reason with the qualification. Many times you have to send that message on your resume, right? By doing FP&A certifications or by doing any certifications related to financial analysis, you send that message on your resume. So imagine if I've completed a FP&A certification and I'm starting my profile para in my resume by saying chartered accountant and certified FP&A finance professional with so-and-so years of experience in the areas of so-and-so, in the sectors of so-and-so. In the very first sentence, I'm giving that vibe to the recruiter that I'm ready for an FP&A role. Yeah. If whatever it is, MBA finance and certified FP&A professional with so-and-so, so-and-so, right? There are FP&A certifications that will help you do that. So remember your resume's task is not to get you a job. Your resume's task is to get you a call, right? So make sure that you build some relevancy in your resume and bring it at the forefront in the very first para of your resume so that you at least get that call. In the call, how do you convince the interviewer about your knowledge about budgets, forecasting, management reporting? That's a different issue. That depends on your technical understanding of these things. But at least you can create that reason on your resume with a qualification. So that would be some top tips for you to kind of transition to FP&A roles. Okay, so let's do a quick recap. And I think we're almost coming to the end of this training. So we need another 10-15 minutes or so. So let's do a quick recap of what we have covered so far. Okay, we understood the controller's world and how it is different from an FP&A world. What are some of the conversations around the focus, the technology, the stakeholders, how that is different, right? We saw key activities like budgeting, forecasting, management reporting, and what are those activities, right? So why they are important and how does this FP&A role enjoys this unique position of sitting very close to the CFO and senior stakeholders in the company because they are the custodian of the performance of the business. They tell the business teams about the performance of the business, right? And then what are some of my top tips to help you transition to FP&A roles? So these are some of the tips that we already just saw. Okay. Now, what's next, right? So we have spoken to hundreds of CFOs at FPI. We have done a survey on FP&A skill sets, and most of the CFOs said that there are 5 critical skills that they are looking for in finance professionals today. One, core FP&A concepts, budgeting, forecasting, management reporting, right? Understanding pricing, all of these things are your core concepts. Yeah. Then comes your financial modeling, right? How do you prepare your financial model, your revenue model, your sensitivity analysis, your scenario planning? All of those skill sets are your financial modeling skill sets. Yeah. Then comes your data storytelling, right? Data storytelling is about how you communicate your analysis to the business teams. They don't understand 10,000 lines of Excel sheets like how you do. How simply can you communicate your story, your findings in your financial statements? or your reports to your non-business teams, non-finance stakeholders. That's where data storytelling comes in. Business partnering, your understanding of the business acumen, right? Your judgments about certain business, how do you partner with the business, how do you build relationships? All of those things are critical in an FP&A role. And then leveraging technology. What are some of the developments around AI, generative AI that are happening, and how can you leverage them in your FP&A roles and finance roles? So these are the 5 core skill sets that CFOs are looking for today. And the survey also revealed an interesting statistic or finding, which said that 79% of the CFOs say that it is generally difficult to find the right talent. Right? Everybody wants experienced FP&A professionals, FP&A professionals with 5 years, 10 years, 8 years, 6 years experience. But there are not enough FP&A professionals out there, right? So any certification, any learning that you get in FP&A today, you still increase your chances of landing that FP&A role, right? Because there are not enough FP&A professionals out there. Now, in order to kind of incorporate all the developments or the gaps that we identified through the CFO survey, we have come up with a 6-month exhaustive certification program called the Certified Global FP&A Professional Program, right? So let's quickly talk about this program. So again, it's a 6-month global certification. Directly, the curriculum is curated by CFOs and leaders, like Asif, me, and some others as well. And then it's as 10 modules. We'll just talk about that in a little while. Everything is experiential and 100% practical in nature. We don't start by simply explaining to you what is a budget. You are expected to read that. It's an executive program. And then you come prepared to the classroom to discuss advanced case studies, simulations, group discussions, role plays. Yeah. You will get personalized support from a career coach as well as placement support in terms of your resume review, your LinkedIn profile review. How can you kind of increase your chances of getting that FP&A roles? On an average, we share 2 to 3 FP&A jobs every week in our alumni community as well, WhatsApp community as well, which is the CGFPA and FP&A Mastermind community, right? Access to monthly Q&A sessions. Asif and I will always be there for any Q&A that you have. Plus, we bring in a lot of external speakers. Last month we had an FMCG company expert come in. Before that, there was a tool company expert. Before that, somebody who had worked in a large global commodity trading company had come in for a session. So we try and bring in some expert speakers so that they can share relevant and latest information with you of what's going on out there in the market. And of course, everything is hosted online on our portal, easy to access. You can read, you can go through the materials or go through the recordings anytime that you want, right? So these are some of the highlights of the CA program. Coming to the modules of what are some of the modules that are covered in the CA program, there are 10 exhaustive modules, okay, which nearly cover everything that you need from working in FP&A standpoint. So I'll let Asif cover the first 5 modules that you see on the left, and then I'll cover the rest 5.
Yes. So in terms of the CGFP curriculum, the modules that you see on the left side of your screen, introduction to budgeting forecasting. So I'll talk a little bit about that. So budget and forecast module is very practical, where we teach you different budgeting techniques and methods using practical examples. So one of the examples that you saw as a presentation was an example of a budget presentation that Dawal shared 15 minutes back. That is the level of output that we would get you to from raw data till that level you are able to present the budget to the CFO. So that is the budgeting and forecasting module. AI in finance and FP&A, a couple of people asked me in the chat, what about how can you leverage LLMs and how can you leverage data storytelling using AI? So in this program, we cover AI tools like Copilot, ChatGPT, Gemini, which are the most popular ones, which are used by most professionals in finance. How can you leverage those tools for FP specific or finance specific use cases? And that is the bulk of the module. At the end, we also share some upcoming emerging technologies where you can also build your own applications with using OpenAI tools. So if you have an idea to create your own application, that is also a part of the module where we show you how you can create your own application using open source AI tools. Management reporting, there we cover examples of the most FP&A management reports. Some of them are month-end, quarter-end reports, flash reports, risk and opportunity analysis, performance management frameworks like balance scorecard, KPIs, OKRs, along with management reports. We also talk and cover case studies on variance analysis, profitability analysis. So that is more or less the management reporting module. Financial modeling covers very specific FP&A financial modeling use cases. To give you some examples, the 3-segment financial model, sensitivity analysis, scenario planning, that are covered in the financial modeling.
Cool. So no matter what FP&A role you work with, data is something which will be very common, and you will be dealing with large chunks of data. So that's where your basic data analysis skill set comes into play. So we cover the basics of Power BI and SQL as well in the program to an extent that you are able to prepare your first dashboard and you are able to navigate your first set of large complex data. We don't claim to make you a Power BI expert, but at least the fundamentals are covered in the data analytics module. Financial analysis, again, financial analysis, not just in terms of ratio analysis, different kind of horizontal, vertical analysis. How do you go about analyzing certain internal reports, right? The external ratios like the debt equity ratio, liquidity ratios, all of these are from an external looking, from an investor looking standpoint, but financial analysis from an internal standpoint, right? Management reports, profitability analysis, all of that is covered in the financial analysis part. And then comes storytelling and presentations. Like I told you, how do you kind of effectively communicate your story? Remember, storytelling is not your dashboard, right? It's not about using your dashboard to try and plug every possible button here and there or a chart here and there, right? It's about how you effectively communicate your story. It could sometimes be just a bold number. It could be sometimes be just one chart telling you one message, right? So how effectively you can communicate your story, that's what is covered in the storytelling and presentations module. We help you understand how you can build your strong narratives. Then comes strategy. No strategic decision in the company is complete without sound financial analysis, right? So here we try and understand different strategic models and also how they interact with the FP&A team or how there is an overlap with the FP&A function as well. So that is what is covered in the strategy module. And then finally comes business partnering. Your business acumen, how do you build strong cross-function relationship with other stakeholders in the company, right? How do you truly partner with the business, right? They don't understand Excel sheets like you do, right? So how do you truly partner them, empower them? All of that is covered in the business partnering module. So all in all, 10 solid modules to give you nearly everything that you need to work in a successful way in the FP&A function. So certified global FP&A professional program, don't take our word for it. So there are tons and tons of testimonials that have already been there. Third cohort is on, the fourth cohort admissions have just been started, or rather one round has been completed. I'll share with you the details about it. So what is the eligibility for the CGFPA program? You need to either have a bachelor's degree or equivalent in finance and accounting and business, or you need to have any of the professional qualifications like CA, CPA, CMA, CMA, CFA, all of these things, right? So again, we don't claim to be substitute for your primary qualifications, but in fact, we are a supplement for your primary qualifications, right? So how do you get the CA certificate? There are two things that you need to satisfy. One is the live programs. We meet every Saturday once for 2 hours, okay, for 6 months. Yeah, you need to complete live classes at least 50%, live online on Zoom, and then submit the capstone project. These two will make you eligible for the final exam. And then there is a multiple choice final examination for 2 hours. Once you complete those things, you will be awarded the CGFPA certificate. Okay. So that is how the eligibility and the certificate is being awarded. So an ROI for a program like this, I leave it to your imagination. Back when Asif and I started 15 years ago, there was no LinkedIn, there was no online courses. We learned with our share of mistakes. So you can fast track your learning journey with this kind of a program. The fee investment in this program is $1,495. It's a 6-month program where you're expected to show up every Saturday for 2 hours. And we expect you to do, carve out at least 60 to 90 minutes for your assignments, for your pre-reading, the case studies that we share with you, which you need to read, go through, and then prepare, and then come to the class for the 2-hour live discussions. And because in the classroom, we want to maximize by spending time on practical aspects. Yeah. The start date is that the sessions will actually start in April, but the induction is scheduled for 22nd March 2025. Okay, so this is the date that you will need to remember. And there are tons and tons of testimonials. There are dozens of success stories who have been able to transition to FP&A, who have been able to better their reports at FP&A. And you can reach out to any of our alumni and they can tell you how this course was beneficial for them. Okay. The date that you will need to remember is 10th March 2025. That is tomorrow. The second program, cohort 4, are closing tomorrow on 10th March of 2025. Make sure that you fill in your applications. So whether you decide to pursue the certification or no, that's a different matter. But what we would recommend is definitely complete the application so that at least you're in the race. The team is able to evaluate your eligibility and come back to you with the offer letter as well. One thing that I would definitely tell you is that I have personally spoken to hundreds of CFOs, and I'm telling you that FP&A is in a high demand function at this point in time. The number of salary surveys by Michael Page and all of these leading agencies, and you can notice that FP&A manager or FP&A analyst salaries are on an average easily 30-40% higher than your normal accounting roles, right? So this is the best time to learn FP&A. So that is one thing that I would recommend. Over the next couple of years, you will see that benefit accruing to you in a much more, in a manifold way, I would say. Yeah. So take advantage of the resources that are available at you, right? So back when Asif and I started, there was no online courses, there was no LinkedIn or anything like that, right? So today, fortunately, we live in the world of online courses and certifications. So take advantage of this, right? So you are directly learning from CFOs and FP&A leaders here, unlike learning stuff from university professors.
All right. Thank you so much for joining, and we'll see you in one of our programs or in one of our webinars in the coming days. Thank you so much. Thanks.
Thanks, everyone. Have a good day. Bye-bye.